God. Whatever. Wow, I'm actually really nervous to make this video, and I'm not entirely sure why. I think it's because I'm so new at trading. So this channel is definitely just for the newbies out there. I'm brand new, still on a demo account. I've been trading now for about 8 weeks. This channel is really just for anyone that's ever been interested in trading, want to know a little bit more about it, and want to start on a journey. Start with me because I'm new, so I'm going to be going over the good, the bad, the ugly, and everything that I know so far. So in this video, I'm basically going to be talking about candlesticks, the patterns, the 5 patterns that I have learned and that I'm following, my rules and strategy. By strategy, I basically mean just the rules that I've kind of set in place for my trading, and also the programs that I use to do it, which are completely free. So if you want to jump on board and try it yourself and kind of just have a feel for it, or just watch me fail epically or succeed, yeah, let's get into it. Oh my God, my phone's. I have a trade that's going pretty good right now, but it's not always like that. This month, actually, I've had quite some ups and downs, as you can see in those red. Those ones hurt, but I'm learning. So it's a demo account, and I'm going to walk you through what that is at the end of the video and how you can start doing this as well for free. Basically, for the first 2 weeks before I even made a trade, I just focused on Japanese candlesticks and exactly what candlesticks were and learned some patterns. And I made a lot of notes, which I am going to share with you. I only really focus on 5 candlestick patterns and try to recognize those patterns to make an educated trade. All I'm focused on is trading gold, baby. So this is it when you're inside the matrix, you know? So really the charts can only go one of 3 ways. It can go down, they can go up, or in some cases it can go sideways. You want to catch a trade when it's going up or down. At least that's what I'm learning and what I'm doing. Now, depending on how big the candlestick is how much power it has, how many buyers are in the market or sellers, what the action is like. So every candlestick really tells its own individual story. So if we kind of just go to the present time, which is here, I have a little trade going on. Just to explain a little bit about how the candlesticks work, which is something that I needed to learn, of course, because if you've never opened this program before, then you need to know these things. Very simple, people, for the beginners, yeah? Okay. On the 4-hour chart right now for gold, this was on September 23rd. And just to explain a little bit about how candlesticks works, because this is something that I need to know on day 1, like what exactly is going on. The green candlesticks, which is your bullish action, it opens at the bottom. So you'll see that this trade actually on this time frame, it opened here and then it closed up here. So it opened and it closed. And on the red, which is your bearish candlesticks, your bearish movement, it's going down. There's sellers in the market. The big boys are here to play. It opens at the top and it closes at the bottom. So it opens here, closes here, opens here, closes here, opens, close, open, close. Now let's say you have some candlesticks with a little doji, which is here, not a lot of body, which means is that it opened here, it went all the way up here, but then the buyers closed it here and it's still closed here. So then it opens and closes, and that's just a little something, a little something. So the bigger the candlestick is, the greater momentum gained. You always want to watch out for some big, huge, big daddies, some engulfing candle flames, sticks, some engulfing candlesticks. Talk about the candlesticks that I've been obsessing about, or just you know, the ones that I've been focused on. Started off, I would have tried to learn all of the candlesticks, hundreds of patterns. I would get so wrapped up. When I first started, I watched so many videos. There are so many amazing traders out there really showing what it is, what's going on, showing you tons of different strategies, and that is super cool, but everyone has kind of their own way of doing it, and that's why I am really just going to continue building my demo accounts until I see profit after profit every month and then go for funding. Gosh. I think I did the same thing as last time and hit pause and record in a mixed up type of way, but here we are. Price rejection is what I use all the time. Figuring out the resistance and demand zones are so important for me personally, as I tried throughout the last 2 months to trade in different ways, or trade when the market is sideways, or trade off resistance and demand zones, or my major key levels or support levels. It never worked out. So I definitely learn where the resistance zones are and the demand zones, supply, demand, your supportive lines. And I'm going to give you an example of that. So I'm going to use an example that's pretty fresh from last week. Last week, gold. There is a good time here where gold went down, baby. Down, 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 down. Down, down, down. If you look at the daily chart for days, 8 days, gold just went down. So if you didn't get on this trend, it kind of settled down here. Now this is the day chart. So what I like to do is go from the day chart and then go down. I use the 4 hour up to the 1 hour chart. So in the 4 hour, I noticed that it went down, 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 and then it kind of settled around this area. So this area I noticed has some resistance. So what I did was just make a little bar here. And why is that? Because as you can tell, there's some price rejection. So the market came down, tried to go up, still couldn't fight through this line, came up, couldn't fight through this line. So something was going on for me, I noticed right here. And I don't want to trade. One of my rules is to not trade when the market's going sideways. So what I did was I wanted to wait until it either made a fresh break in one of two sides, down or up, baby. So this is basically just price rejection. So it's being rejected every time down here. It's not really like pushing through this level. And then when it did finally, I saw this huge, nice green candle here, followed by here. I went in on my trade here, and we're going to see how it goes. It's, you know, doing its thing right now. And just look out for price rejection, multiple rejections on your key levels, and wait for a breakout, either a bearish or a bullish, indifferent, either way, baby. The next candlestick pattern that I look out for is the Marabuzu candle. The Marabuzu is a Japanese word for dominance. So obviously I was attracted to that one right away. No, seriously, the Marabuzu is a very dynamic candlestick. It can be used in an uptrend or a downtrend. They have a really long body with very small wicks on either end of them. When a green Marabuzu is formed, it means the stock market opened at a certain level and kept rising without falling down. The same thing happens with the red Marabuzu. The bigger the Marabuzu, as you can imagine, the more powerful. So definitely look out for those ones. If you continually following my journey and see with my trades, I will definitely be looking out for these. It's kind of tricky for me is that they can also be used as a continuation or a reversal pattern. So kind of tricky, big bodies, little wicks, okay? Some Marabuzu candles. Sorry, I got excited. But here we are in the trading view, kind of going on like a little downtrend. I'm just gonna zoom in, and here's a continuation of a Marabuzu. This is a perfect example. I think you can see there's nothing at the top, barely anything. You can barely see it. It's a strong sign that the downtrend is going to continue going down. Trying to find another baby. Prime example here. This is obviously a continuation as well of the Marabuzu. So you see it has very little wick, big long body. And again, another continuation. It does peak here as a retest, but then you can see if you all the way down, baby, all the way down. So a couple examples that I will be looking out for. That's one of them. The next patterns that I look out for, or that I'm learning, or that I've learned, is the three black crows. What is going on? is the 3 black crows and the 3 white soldiers. This can be used in a bearish reversal pattern or a bullish reversal pattern as the 3 black crows. If you're going on an uptrend and you notice that there are 3 patterns which open and close longer, so you get the lower lows, lower lows, lower lows. That's usually a good sign that it's going to be a bearish reversal pattern. And on the same thing, the 3 white shoulder. Why can I not say soldiers? Enough of that nonsense. Let's get back to work. See the 3 white soldiers coming? It's definitely, no, there is no definite. There is no definite. I should take that out of my vocabulary. But it is something to look out for. You see them climb, climb, climb. That basically means that it is going to be a bullish reversal pattern coming. Same thing in a downtrend. If you see it, something to look out for and something that I've been looking out for. So 3 black crows, 3 white soldiers. The last but not least candlestick that I look out for is the evening star and morning star. This is probably something that I see kind of the most and is a huge indicator of reversal patterns, either bullish or bearish, so up or down. And you always want to look out for these, at least I've been taught to look out for these at your major key levels, at your real support levels. You really want to look out for an evening star or morning star. It is a huge sign that a reversal is about to come. Morning star is a classic bullish reversal pattern. It always shows up at or it doesn't always show up, but when it does show up, you always want to look for this, not when the market's going sideways, at one of your major key support levels. If you see this, it is a great indicator. It would come on a downtrend. You would see slightly doji candlestick, but then followed by a huge big engulfing, which starts right here and goes all the way up, powers up. This is a sign that maybe the bearish is action. The sellers are about to lose power and the buyers are coming back in. I still wouldn't go on a trade immediately when I see this. I'd still want to wait for a few other indicators, or at least wait till this 3rd or 4th candlestick happened. But in similarity, for the evening star pattern happens at your major level, again at the top, your major resistance level. It would be following an uptrend. You would see this slightly doji candle, little small body, stopping the buyers, followed by a huge big kind of candlestick that's either engulfing or same size as this one right here. And then this is kind of a sign, again, with some other confluences. You don't want to go in right away. Been there, done that. You'd want to wait maybe for a retest or for another candlesticks to prove 100%. There is never 100%, but you know, this is a good pattern to look out for. It works, so I've heard, about 90% of the time, especially when you put it up with other patterns and you have other indicators or confluences that the market is going to go in that direction. Definitely a good pattern to look out for. So we will definitely, I keep saying that word. I need a new word for definitely. But follow me and we'll be working with these patterns a lot. It's something that I really look out for, especially when I've been waiting at those key levels for the market to make some kind of choice. The candlesticks, which I didn't know when I first started, are so fascinating. They really have a lot of story inside of each candlestick. And the wicks as well. It's not just the body of the candle, but the wicks. I mean, depending on the length and the size, and if they're at the top or at the bottom and the body, really, it tells you a lot about the momentum in the market and where it's going, hopefully. And then you get to decide and test your strategy. There is so much to learn when it comes to trading, and that's why I've chosen to just follow 1 or 2 people, kind of take from them, learn their strategies a little bit, and then kind of put it into my own. This is only my 2nd video, so if things were kind of sped up or not explained properly, I swear as I go through my trades, I'm going to kind of be explaining what I'm learning as I go, as well as the patterns I've just explained, and show you the trades that worked, it didn't, why, and go through them. So please have patience with me and with yourselves and with your trading journey. This is just the beginning. Now I'm just going to go over a few rules that I made that I'm sticking to or trying to. I've broken the rules before. Didn't really work in my favor, But these are just some strategies that I'm going to be working with. I call it strategies, but really I'm still building my strategy. But these are rules that I set in place that I am going to try to abide to when it comes to trading. Rule number 1, I'm only going to trade when the market's going up or down. I am not going to trade them when the market's going sideways. For example, last week, this was the entire week, the market was like this. It started on Monday, wasn't really doing much, multiple rejections both ways, not really going anywhere. Thursday, Friday, then Friday night, right at close, the market ends with these two candles. And then as soon as it broke out on Sunday night, that's when I realized, okay, we might be in for maybe an uptrend. But I waited this whole week. It was killing me because I don't trade anything else but gold. So these are the charts that I was looking at, and it was definitely just not safe for me. I feel like it was not in a position that I agree that I wouldn't do. I am trying to just focus on this strategy, learn patience with myself. So this took a lot of patience all week, because to me it was going sideways. Maybe someone else could look at it or more of an expertise and jump on it. But I really wanted to wait until it breaks through my support and resistance levels that I set. And I only trade at key levels. I don't like trading when things are kind of in the middle of nowhere. So number 1, only trade when the market is going up or going down. I will not trade when it's going sideways. I only trade at my key levels. Also, what's really important in trading is realizing your risk to reward ratio and setting a good stop loss and take profit. Next rule is to never negotiate with my stop loss. Never negotiate with my stop loss. It's a rule I set. I heard a trader say it in a video. I wish I could remember who it was. I want to say it's the Trading Geek, because literally I think I've learned most things from him already. But yeah, I will not negotiate with my stop loss. When I heard that, it just automatically made sense to me, because when you take your stop loss and you see the market's not going your way, don't negotiate with that. Don't do it. To me, that's like setting personal boundaries with your boy. And it's like, if he does certain things or if he keeps acting up in a way, you take the L, you're out. Bye. That's what a stop loss is. When it reaches that point, get out. Next one. There's always more. There'll always be more. Okay? So I don't negotiate with my stop loss. My next rule for myself when I trade, which I've tracked everything in my journal, literally all my trades so far, is I need to have 3 confluences, 3 certainties, because I don't want to be a gambler. I want to figure out what I'm doing. I want to learn a strategy. I want to track those strategies. And there has to be 3. And even with 3, it still might not go your way. But for me, I want to make sure that I have 3 confluences. So that is one of my rules. I can't just wing it. I can't just be in the moment, in the feeling. Oh my God. No. I want to be a sniper trader, okay? 3 confluences. And my last rule so far, or part of my strategy so far, is wait for the retest. Wait for the retest. Did I wait for the retest? Is there a clear retest pattern? Is this just going to be a fake out? Did it already have multiple rejections? Was there a retest? Sometimes, definitely even now, I have not waited for the retest, and like a newbie, went in, it didn't go my way, it was a fake out, and that's it. Definitely wait for the retest. So those right now is kind of like, yeah, my strategies and my rules to myself. I'm sure that's going to change as well and expand as I expand in this journey. I just started, like I said, and I'll probably say 100 times, but I just started. So that's basically what I'm narrowing in on and focusing on right now, is recognizing and seeing my key levels, my support and resistance levels, the candlestick patterns, having 3 confluences, making very educated trades with the knowledge that I know right now, and testing my strategy to become a profitable trader. Because at the end of the day, if you're not profiting, that's not fun, right? And girls just wanna have fun. That's enough. Something I'm really focused on in my trading is getting comfortable with my risk management. I didn't go into risk management a lot, but I am going to show you kind of the programs I trade on, and I'll give a little example of the stop loss and take profits. But as you go through your journey, and as I'll talk about in my next videos when I show you the trades that I have made, I will be talking a lot about my comfortability level with my risk management, my risk to reward, and my trading financial style, I suppose. Like a plant, look at my muscles. The program that I use for trading, and this is just how I started trading. There is probably, I don't know really, but the program I use is called TradingView, tradingview.com, and what I think is pretty bleeping amazing, it is free. It is free 99. The first 5 weeks that I was trading, I traded for free on this program. I literally just learned. I just did a bunch of stuff. I was just going through it and learning and playing around, and it's free, and I just signed up now because unfortunately with the free one, which is fine, you just can't do playbacks. And what I like to do a couple of times a week is back it up, back it up, and test out all the shit I just told you. So you can't do that with a free account, but TradingView, you can totally just go in there. I trade gold, so it's XAUSSD, gold versus the American dollar. Once I figure out a trade in TradingView, for example, when I was watching this bad boy, I already had this is like kind of a weird thing that happened in the past that showed a little bit of resistance. And like the past, look at that, it repeated itself. This was taken like an 8-day. This was going down 8 days, you know what I mean? It was going down and it hit some resistance. So as soon as I saw some resistance in the day, I was like, oh, cool. We're going somewhere. So then I waited to see exactly what was gonna happen. And I noticed right about here, went down, got stopped, came back up, went down, up. There was always something happening right around here. So to me, it's telling me major indecision. This is just what I did. So I was waiting for it to break through down or up, and then it went up. So if you want to do a bullish action, you think it's going up, you want to buy. Down here you have your little buy. And then this is where you get to choose kind of your risk management. If you want to set this all the way up here, if you think it's going to the next like resistance level, which we didn't set, and down here would be your stop loss. So if the trade goes down to here, you're out. If the trade goes down to here, you're out. Wherever you want to set your stop loss, but you want to set it a little bit. What I did originally is set it just a little bit below these levels in case it came down for a retest again. I wanted to make sure I had a little room to play. And then here you have your risk reward ratio, it says. So you can set that, you know, wherever I try. Right now I'm trying to do a minimum of 2. When I first started, I was always like, yeah, I'm doing a 3 to 1 risk ratio. I wasn't really comfortable with that yet. So right now I'm doing about a 2 to 2 risk ratio, a 2 risk ratio. Then you want to calculate your lot size. You don't really need to calculate your lot size right away if you just want to like just start learning the trades. I kind of set up my trade, which is what the thing I just did, but it wasn't the real trade. We're using it as an example. I don't think that's the trade I actually did. Anyway, sometimes I ramble. Then what I do simultaneously is I open myfxbook.com, my position finder, as well as MetaTrader 5. MetaTrader 5. All free, right? Go into MyFX, I would fill out the information. So my account size currently 7. My risk ratio that I'm trading at is 2%. I'm risking 2% of my account every time I trade. You can risk whatever you like. From what I've learned, most traders do a 1 to 3%. So you just do whatever you gotta do. Then you put in your stop loss, your pips. So then I would go here right at the bottom of my stop loss, and it shows you your pip size. So then I would take that pip size, 2730. Tell me how many units that is for that trade, what I'm getting, and the sizing. So 108 lots. And then I would go into MetaTrader and I would just put in those coordinates. Coordinates? I would put in, I don't know what it's called, but I would go into MetaTrader 5 and I would put in that lot, and then I would add my stop loss and my take profit, and then I obsess over it and check on my trade every 30 seconds. Just kidding. I don't do that. I don't. I try not to do that. I try. If you made it to the end of this video, congratulations. I'm just kidding. I'm just messing with you. I hope you kind of find this stuff as exciting as I am. Of course, when I really start to go through and get the videos up and get used to doing all of this, hopefully, you know, we're going to be celebrating a lot of wins, and I get to look back on these videos in however amount of time, a year, 2 years, whatever, 6 months, and be like, damn, who is that girl? Who's that? Who's that, baby? I'm pretty excited to be here. So thank you.